Uh, Hello, Alistair. Thank you for this opportunity to speak. And today I would like to talk about how we can unlock investments into sustainable and client-friendly agribusiness. So just to give you a little bit of maybe background, so there was an estimation done by OECD that in order for us to meet Paris Agreement goals by 2030, we need to invest globally about 6 trillion euro every year. So the Climate Policy Initiative, which is like a global publication tracking private and public climate investments, calculated that in 2019, this number reached around 500 billion euros. So we're not talking even the numbers near to this 6 trillion. The good news that majority of those investments were by private sectors. But unfortunately, majority of those private sector sources came from the balance sheet of the companies themselves, not from the financiers. So majority of the funds were channeled towards the renewable energy and low carbon transport. And only 5% was invested in land use, water, waste management, and agriculture, despite the fact that the sector can play an important role in climate solution, preserving biodiversity and including through the carbon sequestration, as we know. So lots of speakers already today mentioned the importance of agribusiness sector to climate change. It's extremely vulnerable, and it's also a major source of global employment, and 70% of incomes of the world's poor, including women. And in terms of emission, we know that it's quite a big contributor if we look at the whole value chain, from 20 to 30% if we also include food processing. So that we can see that the sector is definitely underfunded when it comes to sustainability and climate solutions. And we need to facilitate more investments in the sector. So what are the reasons behind the situation, right? So first of all, I think it's lack of climate ambition and comprehensive climate strategies on the side of the national governments and regulators. So there is a lack of financial and fiscal incentive for industry players, because in order to apply climate-friendly practices, you need to change the business completely. It takes time, it's risky, and it's also the outcomes are not necessarily immediately visible. So in contrast to investing in renewables, for instance, where there are very clear business models, reward mechanisms, the investors see high risk, so there is a discrepancy between risk-reward profiles in climate projects in agriculture. Also important point that majority of the non-climate smart practices and technologies that today we talked about a lot, unfortunately, are still not mainstream. So lots of speakers mentioned that only 7.5% of EU arable land is currently under organic crops, and there is a very ambitious plan to increase it to 20%. This requires time, knowledge, and fundamental behavior change. So also, there is a lack of understanding of the climate change implications and risk from the side of the financiers. So these are the main problems. So what we are doing as a sort of multinational development, the part of the family of multinational development banks. So of the amount that I gave you in terms of climate finance, so around 43% is provided by public sector, which means governments, multilateral development banks, and so on. So far, we were in the forefront of supporting the transition of the carbon to carbon neutral economies. So our commitments, the MDB's commitment in 19 reached $62 billion US, and 85% channeled towards low and middle income countries. So this year in October, we, EBRD, approved a new 5-year green economy transition strategy. It's our second strategy since 2015. So we committed to actually scale up our climate and environmental ambition to 50% of our total investments into green economy by 2025. So this strategy is very much aligned with the EU Green Deal, circular economy, and we actually took part even in development of EU taxonomy approach. So specifically in part of the agri sector, we provide debt and equity instruments, and we mobilize commercial sources to support companies investing in energy efficiency, sustainable climate technologies and practices, and climate-friendly assets. So examples could be support and preparation for companies for TCFD disclosures, decarbonization roadmaps, climate vulnerability assessments, sustainable corporate governance, and introduction of the circular economy business models. We work with the SMEs directly and through partner banks. We facilitate development of the sustainable capital markets by green bonds and green investment, but not to be fooled. This market is still, it's growing very rapidly. Last year was a peak year with 50% growth, but just to put things in perspective, green bond market is only 5% of the total bonds in the total bond universe. So a very important point that I want to make is related to mobilizing donor funds, because what we observed so far, that in order to bring climate investments into agri sector and to mobilize more, sometimes we need concessional financing, because there are certain barriers to entry, specifically with respect to the tenor of those projects and also with respect to risk-reward mechanisms. So we need to bring a little bit more on that front. So we use lots of donor funds from EU, from the climate funds, to also leverage our own financing. We provide a lot of technical assistance, which I think is very important, because education in climate funding is very important. So this relates to energy efficiency audits, animal welfare, climate assessments, because unfortunately, and this is one of the main problems, is that sustainable agri is still not mainstream, and we need to make it mainstream. This is where I think our role is. In terms of what we can do to accelerate private sector financing, because as I mentioned, majority of these funds that went to climate related activities, they were from balance sheet of the companies, meaning that they're doing it themselves. And I think Euro Commission made a big progress in terms of actually encouraging the private sector, specifically financial institutions, to invest more by way of taxonomy, introducing specific clear benchmarks on how to name and to benchmark the green investments. Also to encourage the financiers to start thinking of their own portfolios and disclosing their own risks. The more they disclose, the more they look at their risk, the more they price the risk related to climate change, they will really realize that more investments have to be moved from carbon intensive sectors and more into the sectors that actually serve as a carbon sink and are climate friendly. So this change is already happening. And also I think would be interesting to see what would be the discussion related to the prudential norms for the banks and how this framework can be developed. In terms of the governments, of course, regulation is important. So what we've seen with our clients, so many times, because it's a very big investment and complete change of the business model, let's say in primary agri, the companies need incentives such as carbon market. They need to be incentivized to actually introduce advanced agricultural practices in order to monetize this. So this is very important. And again, Green Deal, in my opinion, is and especially fork to farm with lots of legislation put on, is a very big advancement, and we have very high hopes for actually greening and bringing more private sector investors in agri sector.